Ever wondered what dividend stocks are and how they function? Puzzled about why companies choose to pay them? Well, buckle up as we dive into the intricate world of dividend stocks. Imagine owning a slice of a thriving business. You're not involved in the day-to-day operations, but as a shareholder you have a stake in the company. Now, wouldn't it be nice if this company shares some of its profits with you? That's exactly what dividend stocks are. They are payments made by corporations to their shareholders, essentially a share of the profits that a company has made. So, how do these dividend stocks work? Well, companies don't just wake up one day and decide to pay dividends. It's a calculated decision made by the company's board of directors. They determine the amount of dividends to be paid out, based on the company's profitability and future investment plans. Once decided, the dividends are paid to shareholders on a per-share basis. For instance, if a company declares a dividend of $1 per share, and you own 100 shares, you will receive $100 as dividends. These payments are typically made in cash, but sometimes companies may choose to pay dividends in the form of additional shares of stock. Now, you might be pondering, why do companies pay dividend stocks? The secret is in attracting and retaining investors. Dividend stocks are a method for companies to display their financial health and profitability. By sharing a portion of their profits, companies can draw new investors and keep the existing ones content. About the tech titan, Apple, or the consumer goods powerhouse, Procter & Gamble. These companies have consistently paid out dividend stocks to their shareholders, underscoring their financial security and strong earnings. Dividend stocks are usually paid quarterly, but some companies may pay them annually, semi-annually, or even monthly. The frequency of dividend stocks payments can influence an investor's decision to invest in a particular stock. Now, not all dividends are created equal. There are different types of dividend stocks. Most common type is the regular cash dividend, which is paid out of a company's profits. Then there's the special dividend, which is a one-time payment made under special circumstances like the sale of a business. And finally, there's the dividend reinvestment plan, where the dividends are automatically used to purchase more shares of the company's stock. To summarize, dividend stocks are a share of a company's profits paid to its shareholders. They are a strategic tool used by companies to attract and retain investors. The amount and frequency of these dividends are decided by the company's board of directors. And finally, there are different types of dividend stocks, each with its own unique characteristics. So the next time you hear about dividend stocks, you'll know exactly what it means, and who knows? Maybe you'll even consider investing in a company that pays dividends. After all, who wouldn't want a slice of a company's profits? Now that we've covered the basics of dividend stocks, let's delve a little deeper into the different types of dividend stocks that investors can choose from. First up, we have dividend kings. These are the royalty of dividend-paying companies, having increased their dividends for at least 50 consecutive years. Now that's reliability. Next we have dividend aristocrats. Slightly less regal than the kings, but still impressive, these companies have increased their dividends for at least 25 consecutive years. Lastly, REITs, or real estate investment trusts. These entities are required by law to distribute at least 90% of their income as dividends. This makes them a popular choice for investors looking for a consistent income stream. So, whether you're looking for the stability of a king, the growth of an aristocrat, or the high yield of a REIT, there's a type of dividend stock out there that's the perfect fit for your portfolio.